Okay, good morning, everybody. Welcome to ICSR. Oh, we've got a few more coming in now, typically. Okay, so we would ask that you turn your cameras off if you have them on and your sound. If you want to move to side view, it's easiest to see the slides. Today, there will be some polls. The answers to those polls will be anonymous, so you don't need to be concerned about anybody picking up that you have what your position is. If you have questions, we will be dealing with them at the end. Could you please raise them in chat, and Ben will then provide them to me later on to provide an answer. We also have, at the end of the session, there will be a feedback questionnaire circulated. We'd be very grateful if you could answer that. It helps us to improve both content and what we do and provide. So let's crack on. We've got quite a few new faces today. So we're going to go through a bit of an introduction to OpRes. I'll make it as short as possible, but apologies to all of those who have seen some of the slides before. For those who are new to the topic, I'm happy to have an offline conversation with you about OpRes if that would help bring you up to date. There are quite a few people who are still wading their way through the policy statements. We are going to cover these topics. You'll also find at the back, there are some appendices, which I won't go through. There's a timeline. We are now, 2 months into a 12-month timeline. So there is 10 or shortly to be 9 months to get your act together. We've also just provided a little sort of flow diagram which sets out a common approach to dealing with OpRes, the processes that are required. And we've put in some pretty pictures of the team that ICSR has who are working on or have worked on operational resilience or are available to work on operational resilience. There's one other thing that I would refer you to if you're in the Lloyd's market. The LMA OpRes committee has now issued its guidance. We strongly recommend that you have a look at that. It has some very good material in it and is quite helpful. So get a hold of that if you haven't already seen it. Right, moving on, first poll. I'm going to give some of the feedback I had last time was that I give too many people too much time. So we're going to do 30 seconds this time. So please, if you could, have a go at answering this in the next 30 seconds. I understand that you can't see what I can see, but there's moving and shifting going on here. We've got about half of the people. If you could, we're going to give it just a little bit longer. I think there's about 10 seconds left. So anybody else who wants to do it, you need to complete the poll now. 5, 4, 3, 2. Okay, let's release that, please, Ben. Right, so interesting, there is 33% who haven't started planning. There is 38% who are in planning, 5% in pilot, and 24%, so there's quite a few advanced people who are doing their important business service mapping at this stage. It's not an area I'm going to talk about today, but it's listed in our timeline of how to achieve these flowchart. Nobody at this point is setting impact tolerances, although some of those may be dealt with in the pilots that people are undertaking. Okay, let's get rid of that and crack on. Right. Oh, hang on, I've got a problem getting to the next page, apparently. Don't know what's going on here. There we go. Right. Okay. Sorry about that. So what it's about and when did it start? So firstly, it started back in 2018. In fact, probably 2017 was when the PRA and FCA started to talk about this. It's really driven by issues that were happening 2013, 2016, to 17, to 18. Yahoo, millions of people were hacked in 2016 with NotPetya. 12,500 government departments and big banks got hacked. And then 2017, WannaCry, the speed at which these things are happening increased. So 230,000 computers across 150 countries were impacted in one day. And then in 2018, TSB made a mess of its transfer from systems, and 1.9 million people were locked out of their accounts for 3 or 4 days. So the big issue for the PRA and FCA, this came out of historically IT issues, but it isn't just about IT. It is about how you make sure that you're able to keep your services to customers resilient. And just on from 2018, I want to give you an idea of what's happening now. So in the last 3 months, February, Pan Am Life in America got hacked and shut out of their computers. March, we all know probably about the result, the announcements yesterday. CNA got done in March. They paid 40 million to get access to the computers again. And only this month, AXA in Southeast Asia has been hacked. So, you know, it's gone from once a year for a big one of these to, you know, effectively one every month. So it is a very big concern for the regulators and for companies. Right, so after 2018, there's been a series of consultations and policy statements. The most recent were issued in March this year. They give firms a year to get their act together. I almost said something completely different, but inappropriate. So it's not just for insurance, it's for banking, other financial services. And the consequence is that the language of these policy statements is not easily transferable and not helpful in the insurance context. We also know that the PRA has confirmed that it is going to keep its focus on this because their business plan came out this week, and operational resilience received an entire page. So quite a significant issue to be dealt with, and quite a lot of focus from the PRA. So let's go to what is it? So it's got elements of risk management, it's got elements of business continuity, it's got elements of disaster recovery. The key issue around operational resilience is that there is an assumption that a disruption will happen. So they don't start from the point of view of if something happens, they say it is going to happen. What are your plans and how are you going to maintain your service? It brings into being some new concepts around important business services. It's looking at these from the client's point of view. It doesn't ask you what you think your business, well, you have to decide what you think your important business services are, but in doing so, you have to look at it from the point of view of the client. What is the impact on the client if a particular activity doesn't take place or a particular service isn't available? It also brings into concept impact tolerances. And these are the tolerances, the levels at which you have to maintain. And if you exceed one of those tolerances, you are expected to be resilient. You are expected to be able to respond. So that is what we are going to be talking about significantly today. Right, definitions. We have 2 separate definitions, and this is primarily because of the different statutory duties of the PRA and the FCA. If you're dual regulated, I'm sorry about that, but that's the way it goes. And as we'll see later on, what it does mean is that there will be cases where you may have 2 impact tolerances, one for the service to the client and one for the impact on the firm. Importantly, these definitions, which talk about a service provided by a firm, are not everything that can cause harm. So the PRA's key issue is around prudential and protection of policyholders. For the FCA, it's about the level of intolerable harm that may be caused to a client. but also around the soundness and stability of the financial market. The key thing is that this is not everything that can cause harm, okay? So it's not a line of business. It's not about internal services such as payroll, unless they are absolutely critical to the delivery of an important business service. And right at the bottom, I've highlighted that point about matter for judgment for the boards and the senior management for a couple of reasons. The first one is that it has to be the board that makes the choice as to what are important business services. It has to be the board that determines what the impact tolerances are. And the PRA and the FCA are absolutely clear that those decisions have to be documented. So as you're going through that process, you have to provide to the board a document which will set out the assessments and will provide a decision process. And I sort of think of it as not unlike the internal model validation process that has to be undertaken for internal models under Solvency II, although not necessarily as rigorous. Some firms are treating it that way, other firms not so, but there definitely needs to be a process and a documented process which indicates how the boards got to deciding what were IBS, important business services, and what the impact tolerances would be. So those are key issues. So let's look at what an impact tolerant, important business service is, sorry. Definitions, examples for banks are payment, payment of annuities by life insurers, policy issuance for insurance, cash withdrawals from retail banks. For the FCA, they talk about cash and check account balance and cash withdrawals. They talk about customer authentication on telephone banking. So you can see here it's an activity. Is that a service to a customer, or is it an activity that is critical to the provision of a service to a customer? Auto renewals on insurance policies. Some of these are critical activities. And what we've done is we've tried to look at what might be an important business service and may not be. And some of what historically is an important business service definitely will remain that way. So underwriting policy issuance, midterm adjustments, claims and renewals. Later on, we may find that some of these may not be critical and may not therefore need to be mapped. Additional services, roadside assistance on motor, travel, repatriation of injured travelers, household emergency services. You know, you have a plumbing fault and you've got water pouring in or down. You need somebody to get there quickly. SMEs may have a problem if, you know, they're locked out of their IT and they can't trade. So how quickly do you respond to that? Activities including cybersecurity, KYC, customer authentication, claims management and payment systems. They're in-house, behind-the-scene things potentially, but they are potentially critical to the delivery of the service that you provide to your customers. So I want to give you a quick example. We're going to look at claims. Okay, so there are 4 general stages for a claims process. You have first notification of loss, you have the assessment of the claim, you have the approval, and you have the payment. Now, each step there is going to rely on IT. It's going to rely potentially on the phone. It may involve email. It may involve broker-led activities. It may involve third parties. But each of those has to be mapped, and it has to be, and the board has to decide whether or not it is critical. And that, you know, that's key. So it's just an example that you have 4 stages in a simple service. So claims payment is what we would traditionally call a service, but there are 4 aspects of that, and each of those will involve different resources, including, you know, different IT, different people, and possibly third parties. Right, we're moving to the second poll, if we can. Yes, again, 30 seconds, please, if we could. The question is, what level of board engagement do you currently have? Now, obviously, those who are only just starting the planning may not have that engagement so much at this stage. Hopefully, those who have moved a bit further on we'll have a bit more. Not quite halfway. Another 30 seconds, I think. Or maybe that will actually have been a minute. So let's give it 15 seconds. We've passed halfway. We're heading towards 60% of people. All right, I think that's good enough. Let's close that out, Ben. Right, okay, there we have. We've got 52% have not set up a governance structure for their op-res, and 43% the governance structure is in place, but no reporting has taken place yet. And that's probably right. If you haven't got your impact assessments, your impact tolerances in place, you haven't set up your reporting framework, then that's probably about right. Some of that governance structure may actually be about the project for implementing op-res rather than actually the BAU later on. And I'm impressed there are 5% who have BAU reporting underway. I suspect that 5% is also the 5% who are into a pilot already. So they're doing a full pilot of all aspects. Good. All right, let's get rid of that if we can. Okay, cool. Right. Okay, now we've got the same problem again with next page. Always seems to be after the polls. Right. Okay, so impact tolerances themselves. Let's start looking at those. Impact tolerances to be set at the point at which the disruption to the firm's important business service would pose a risk to either the firm's safety and soundness or financial stability or the appropriate degree of policyholder protection. That's PRA, FCA, intolerable harm to the consumers. Now, what did happen when the policy statements came out in March was that there was a greater, they brought the two definitions closer together. So both now, for example, cover services that are provided by third parties, and both now look at these questions of firm safety and soundness. It's absolutely key because that is the level at which you set your tolerance. Everything is driven by that definition, all right? And then we have some guidance which has been provided by the FCA and the PRA. This has also been supplemented partially by the LMA work, which is well worth looking at if you can. First thing is that you should take account of the numbers and the types. Okay, so that may be how many people might be harmed and do they have any particular features. So I've pointed to vulnerability, but there may be other features. So if you're looking, for example, at a cyber product, then the harm that can be caused to a customer or a policyholder who is a digital policyholder is potentially going to be a lot greater, a digital trader is potentially going to be a lot greater than it might be to somebody else. So it's key to, you should have assessed this process, or you should have assessed your customers as a part of your mapping process. And it's key then to take account of that when you're then looking at where the tolerance should be set. Importantly, again, I've made the point already, the impact tolerances must be set at board and senior by boards and senior management. There needs to be a documentary flow of how those decisions are made. It has to be expressed as a clear metric, and it is now compulsory that metric includes duration. So as we will see shortly, the question is, how long will you allow that disruption to continue before it becomes intolerable or intolerable or causes intolerable harm to consumers, or actually could get to the stage where your firm's safety and soundness is in question. So timing is one of the things that you need to look at. but there might be others. There might be, for example, the number of people involved or the transactions, and we'll come to that again shortly. And then you are entitled to take account of cycles where there's an increased or decreased activity. That means that for periods when there is a low level of, for example, renewals. So in the London market, there are periods between, 1st of October, 1st of January, 1st of March, 1st of July, 1st of October. Those are big renewal dates. You're allowed to, if you want, have flexible impact tolerances, which say, well, the harm to customers of our failing to renew during a period in between those is going to be less. So you might be able to set your impact tolerance at a different level. We haven't seen too many firms taking account of that. The tendency is that if the customer is, for example, a consumer, they're going to not want to change that at all. Okay, what's next? All right, so you're required to measure the extent of the disruption. What is the potential maximum value of loss to the customer or the firm? What are the number of transactions that are going to be impacted, the number of customers affected, and the reputational damage to the customer or to the firm or to the market. So here, you're going to take a view of harm according to the customer, but you also have to take account of the harm potentially to the firm. And that's that PRA piece around market stability and firm stability. But from a customer point of view, you may have, for example, we've seen during COVID-19, SME business, we have quite a lot of firms that are potentially going out of business if they don't get paid under their policy. Now, interestingly, the question that somebody might ask is, would firms be in difficulty due to issues from COVID-19 and by firms, I mean insurers and brokers, would they be in difficulty because of a failure to be able to provide a service or a failure to pay a claim under COVID-19? And the answer to that is no. And the reason for that is that the disruption that has happened in the market that has been caused by lockdown is not the reason that customers are not being paid. Most customers are not being paid because there are coverage disputes, not because insurers haven't been able to put in place workarounds and ensure that claims are dealt with if appropriate. So the answer is COVID-19 is a reason for the PRA continuing to look at operational resilience, although the IT side is probably greater, but actually COVID-19 would not necessarily have resulted in insurers or brokers finding themselves in trouble with the PRA or the FCA. Another point made and guidance provided by the FCA is that an impact tolerance can be set by and should be set by reference to a single disruption. What we are seeing, however, is that many firms are looking at multiple disruptions to a single IBS resource or activity and single events which might cause multiple service disruptions. So you might have an IT application which is used for a series of important business services. On the other hand, you might have multiple events that could result in a disruption. Either can be looked at, but you are only required by the FCA and PRA under their guidance to look at single disruptions. And they might be, for example, flood, they might be IT, they might be a power outage, they could be, another pandemic, but it only has to be a single disruption. All right. And I think I made this point earlier, impact tolerances can be required twice So you might have one set of impact tolerances for the impact on the customer, particularly if, for example, it's a consumer customer. But if you were, for example, a monoline motor insurer and you had a power outage or an IT issue, which meant that you were unable to renew or unable to pay claims, then you have to have a separate tolerance for how long you can allow that to go on before actually your reputation is in tatters. Further guidance from the regulators is that workarounds should not be taken account of when setting impact tolerances. So let me give you an example. If let's use London market. So if you have an IT problem, but actually a broker can still come and see you to write a risk or to service that risk or to get approval to a claim, you can't take account of the fact that you can carry on that service just because the service itself is not being carried on in the way it had. However, what you can do is consider workarounds from the point of view of criticality. Okay, so there may be services which you decide are not critical because workarounds can protect the service. So yes, there could be a disruption, but actually that disruption is resolvable quickly and therefore is not critical, and it's resolvable quickly because of workarounds, such as in COVID-19, people working from home on their laptops and connecting via Citrix or whatever the case may be. All right, last poll. Ben, please. Oh, 100%. No. So for a moment there, it was 100% not sure what people were going to be doing about their impact tolerances. We're now moving a little further on. We'll give it another 10 seconds for those who want to have a go. All right, Ben, let's stop that one. All right, so the results of this are in line with the others. Those who are more advanced and have already decided that they're going to set impact tolerances at IBS level. There are some who have decided that they'll set them at service and activity level. I'm a little surprised that everybody is setting them at IBS level. I think there's a possibility that you could set at a service activity level and roll it up to a higher one so that you can monitor service and activities, but have an overall for a particular service. So let's close that out and move on if we can. There we go. All right. So the first thing is grouping. And we didn't cover this in the poll, but there is a question over whether or not firms are able to group IBS services and resources. And the answer is you can. It may be that you have a series of important business services which are so similar and have so much of the same resource that you can simply say, we're going to group them together, and this is the impact tolerance we will apply to that service. For example, London market, you may group marine and aviation together. They are different products, but they may share the same IT services. They may share not necessarily all the same staff, but some of the same resources. and some of the activities will be very similar. So you might want to group them and say, okay, we're going to do that, and here are the impact tolerances we are setting for that grouping. I said marine and aviation, it could easily apply to, you might want to group energy and property together as well, or you could group them all together. Entity and group level, there's a couple of things here that I want to cover off. Firstly, will you be required to have impact tolerances at parent company level? The answer to that is it's not clear yet. The PRA have indicated that they are looking at the issue. They are looking at the drafting of the legislation and how that will progress. So it may change, but at the moment, impact tolerances have to be set at entity level. Again, you could sort of think of it a bit like ORSAs. The ORSAs are done at an entity level, and so is going to be the impact tolerances. And in fact, your recognition of your important business services. Now, what happens if you have a group where you are providing the same service in different legal entities? So you may have, you may do, let's say, travel insurance. You might write travel insurance through in the London market, and you might have 1 million customers. You may have a small subsidiary based in somewhere in the north or somewhere in the west or whatever it may be, and they may be writing travel business, and they may have 10,000 customers. Do you have to have the same impact tolerance? The answer is no, you don't. But what you have to do is have a well-reasoned, well-documented explanation for why you are setting them differently. So, for the insurer that is writing 1 million customers of travel business, 10,000 is 1% of their book. Okay, so that may actually be their tolerance level. What are we prepared to accept? 1 day and 1%. For your legal entity in the West Country or the North, 10,000 customers would be 100%. So there is an example of a reason why you may not want to do that. However, if they're using the same IT system, it might be, and some of the same underwriting people, then it might be easiest just to say, you know what, we don't want to do that. We're just going to set it at whatever we're going to set it at. Okay. So let's look at London market as an example. Here, new renewal business, large specialty risks. We've already talked about grouping of those. Same underwriting systems, same central systems, they're broker placed. Now I want to make a point here because I've grouped together new and renewals. But actually, you may say, well, new business, is it to us, is that critical? Okay, if something fails, if IT system fails, if we can't get access to files, if we can't underwrite business, we can't quote, is that critical? And the answer may be, from an IBS point of view, not from an impact tolerance, you may decide that writing new business at a time when your systems are down and you're having to find, solutions to renewing business, that you can let new business go. So you may decide that it's not a critical activity. It may be an IBS, it may not be a critical activity, and you may therefore decide that you're not going to map it and that it doesn't therefore need an impact tolerance. On the other hand, for your renewals, your IT fails, you need to have an ability to, you need to have an impact tolerance for that, because renewals are going to be critical to your customers. Okay. Having an IT failure on the 31st of December and not being up and running on the 1st of January, or perhaps it's actually the 30th of December and not being up and running on the 31st of December is probably not particularly good for your customers. And ultimately, it may not be particularly good for your reputation. All right, let's look at motor and household, new and renewal. So I'm thinking here of, a digital distribution model. A firm, for example, that has its own portal, sells direct, or possibly goes through, you know, a money supermarket or one of those companies. For them, new business and renewal business is absolutely critical. It's critical for them. It could be critical for their clients. So their impact tolerances may be down to ours. How long can we afford not to be able to quote new business, buy new business, ensure the payments are undertaken, and ensure that policy fulfillment takes place? Now on payment, interestingly, it is an activity. Is it critical to renewals? For many websites, for many digital distribution models, you can't actually bind the business until you have received the payment. Or as a customer, you can't buy the policy and get it bound until you have given them credit card details. So payment, an example of something one may think is not critical, but actually for some is critical. For the London market, you can't adopt the same position on claims. You can't say that non-payment of claims isn't critical. So all claims handling is going to be an IBS. The question is, what are going to be the impact tolerances? And for, you know, for large multinationals, your impact tolerances may be very different to those for your personal lines customers and for your SME. Okay, so some products, some examples. Travel. Here you have a variety of different ways that a service is provided to a customer. They can lose their luggage, they can lose their passports, they may be hospitalized, they may need repatriation. Each of those you may want to set a different impact tolerance for. You may say, you know what, lost luggage, okay, when they get back, we can deal with that. They can buy themselves some new clothes. We can pay them back for that, you know, after they get back. It's not necessarily critical that they receive payment for that straight away. Lost and stolen passports, you can't get back until you've got a replacement. So there may be an element of criticality around ensuring that a service is available quickly. On the other hand, hospitalization. So somebody has been injured overseas, they're in a hospital, they need to get payment. If they don't get payment at the hospital at the time, there can be an issue, right? And if it looks like they're going to require long-term care, they need payment fairly quickly. Otherwise, the hospital may say, "Well, you're not paying our bills. We can't keep you." Repatriation, obvious. Somebody who is so badly injured and so badly requires expert medical attention, that is going to be short-term, and one day may be too long. Now, we talked earlier about the potential of setting impact tolerances at an activity level or a service level. Some of those you may actually decide aren't the same important business service. You may decide repatriation is a completely different service to hospitalization or to payment for lost property. But equally, you may decide that you're going to keep them as the same service, and you may say, well, we will have these metrics and we will monitor these metrics, but we're going to roll it up and we're going to say, for our travel business, we are going to have one overarching impact tolerance. And you may decide that's going to be 1 day, or it may be hours. But you have to decide this for yourself. You have to take a view as to what is the best approach. You can take repatriation and say that's a different service. You can say hospitalization is a different service. Or you can simply say, these are travel claims, these are consumers, absolutely critical that we make sure that they are paid when we can. We'll give them one impact tolerance. Another product, motor claims, you've got a variety of different things. You've got roadside assistance, you've got stolen and damaged vehicles, you've got the need for replacement vehicles, and you've got third-party injury. Same point, roadside assistance hours is important. It's provided by a third party. You need to make sure that that third party can provide that service and is resilient up to a certain level. Stolen or damaged vehicle, is it critical? Not so much if they're getting a replacement vehicle. Now I don't want to mix up the question of criticality with impact tolerances, okay? Criticality is about whether or not the service needs to be mapped and needs to have an impact tolerance. But an impact tolerance is about how long you will permit it to last in view of the potential damage to the customer. So when I talk about criticality, I'm really talking about either, whether or not it's an important business service that needs to be mapped. So third-party injury may not need to be mapped because that is something that you don't have to concern yourself with in a short period of time and is something that can be dealt with over a period of time. Whereas, lost as well, the same may apply for stolen and damaged vehicle if you have a replacement vehicle service. So those two may not even need to be mapped. They may not even need to have an impact tolerance. Whereas roadside assistance, replacement vehicles may. Again, it's down to you. I want to cover off some others because we've got quite a mixture of people on today. So income replacement insurance, is it critical? What is the impact to a customer? It's probably, I would say it was critical. Somebody who's lost their job, has been injured, can't work, they're going to have a mortgage. And I would say that more often than not, in fact, most of the time, income replacement is for consumers. There may be BI on property policies as well for SMEs and large businesses, but I'm talking here primarily about consumers. And so you may need a short time frame there, particularly in view of the need to make sure that people are able to buy food and pay their mortgage. You take life insurance. There are two sides to life insurance. You have annuities. Again, it's not income replacement. It is income, or lump sum. The impact tolerance you may want to have for lump sum may be very different to the annuity. I'm not going to say whether or not you need to consider them to be critical. Obviously, I would probably say that they were, but it is a decision for you. Home emergency services, that's probably a short time for an impact tolerance. And cyber, there's a variety of different services that are provided under cyber. Customers who need their laptop, need their IT for business are going to have a higher need, and that may not, that may apply more to the SME market, for example, than to consumers. The point is, you have to look at each service for each type of customer closely. You have to document how you're going to do this, and there has to be very good reasoning for why you have selected that tolerance. And you then have to put it to the board to approve it. Once you've done that, you have to monitor them. And this will be the last of our briefings. So I'm just going to go over it very, very quickly. Firstly, monitoring has to take place at board and/or committee level. Board has to have oversight of operational resilience. Monitoring should cover material changes to the important business services and the impact tolerances. So they may be changes in the business model, and that might be as a result of, for example, an acquisition, a merger, something like that. It may be changes in the resources and activities. You may bring in a new IT system. You may move from manually underwritten to an IT system. And you may change products. So you may bring in a new team of underwriters or a new team of brokers or whatever the case may be. And you need to be able to monitor those material changes and incorporate them into your mapping and to your tolerances. So, for example, on an acquisition, you may not only get in new products, you may increase the size of your business, and you may need to review your impact tolerances because all of a sudden you're dealing with a lot more customers. The same happens in products and delivery. Ongoing monitoring. There needs to be a continual assessment, and one approach that is being adopted is firstly to use MI that is coming through, that's being prepared on incident reporting, risk assessments that are being undertaken by the risk team, cyber security assessments that might be undertaken as part of your annual audit program by your external auditors, or your risk assessment piece, constantly looking at changes in risk to the business. And finally, the fourth type of monitoring that will be required is through scenario testing. So all impact tolerances have to be scenario tested. There are questions about how long and how often and how you go about those. Those are the sort of topics that we are going to look at next time we have a briefing, which ends today's briefing. We are now going to take questions. Ben?
Kenneth, I've got two questions for you at the moment.
Okay.
The first question, claim on slide 10, approach to tolerances. And the question is, would you recommend we set several impact tolerances depending on vulnerability of clients or other factors like peak versus non-peak times?
I mean, the experience of what we've seen so far is that peak, non-peak times is a bit of a non-entity. It's unlikely, for example, in a digital distributor is going to see peaks and non-peaks. There may be some around 1st January or something like that. If you're, but a lot of car insurance, for example, a lot of household is throughout the year. For property and casualty or professional indemnity, there are some peak periods, but firms are tending to not set and have variable impact tolerances. They are complicated to monitor against, for example. So you are much, you are much better off. In fact, I think you need to take account of the numbers and the types of your customers. It's much more likely that the impact to a customer is going to be tied to who they are and what they do and what product you are selling them than when their renewal comes up. And so I would have said that that's probably the key assessment, is who they are, and then obviously what damage can be caused to them by a disruption and your failure to provide the service. Second question.
Thank you. If anyone else has a question, please do ask using the chat facility. The second question is, whilst I appreciate the importance of assessing OPRES and identifying IBS within our firm, can I check my interpretation of the new rules and guidance in that these do not specifically apply to our firm, being an MGA wholesale broker? Notwithstanding this, I still think it is important to see aspects of this through with our company.
That's a good question. So operational resilience does apply to brokers and to MGAs and to wholesale firms, wholesalers. Whether or not it applies depends on whether or not you are an enhanced firm and under SMCR, effectively. So if you, I think my recollection is that if your turnover is 35 million and above, or is that net profit? But you need to look at the question of your size and volume of income rather than whether or not you are a broker or a wholesaler. And we can talk to you about that and give you the full answer if you want. But It's not about whether you're a broker or a wholesaler. It's about whether or not you have a turnover of a certain limit. Okay.
There aren't any more questions, Kenneth.
All right. So that is the 4th briefing. We don't have a date for what is probably going to be the 5th briefing and the final briefing, which is about scenario testing, but it will be fairly soon. We have a feedback questionnaire coming to everybody, and this slide deck and the recording of this session will be available on our website when Ben has weaved his magic and taken out all of my ums and ahs and whatever else there was in there that he thinks needs to be taken out. In the meantime, thank you very much for your patience, for listening to me, and I hope you all enjoy the long weekend. May the sun shine. Thank you. Have a good day.